Hello and welcome to Pro Trader Strategies market commentary for Friday, December the 20th. My name's Eric Wilkinson, and you very well may recognize me as the Wolfman from mainstream media, where I've talked about everything from economic to geopolitical and market analysis. I'm also here in these webinars to talk about the economic data and how that impacts the overall markets and the economy. But I also talk about option strategies and how we can implement those into our portfolios to increase yield. I think that's the best way to actually increase our portfolio value over and above just going out and buying the ETFs. All right, so without further ado, please remember past performance of any trading system or methodology is not necessarily indicative of future results. And now let's talk about the overall economic data. Across the pond, we really didn't get a whole lot of economic data. To be quite frank, we did get Great Britain's final GDP numbers coming in at 0.4%, expected to be 0.3%. That's a good thing, obviously, being above what was expected there. French consumer spending came in slightly lower than expected at 0.1%, expected to be 0.2%. Now moving back over here to this side of the pond, I don't usually talk about Canadian economic data points, but it was actually so bad that I think we do need to talk about it, and it has to do with core retail sales coming in at negative 0.5%, expected to be a positive 0.2%, and they revised last month's number down from a positive 0.2% to a negative 0.1%. So not seeing consumer spending obviously over there. That number stripping out automobiles. Also, when we put in retail sales coming in negative 1.2%, expected to be positive 0.5%, no revisions to last month's number. But something to note, we were seeing, at least here in the United States, with our retail sales coming off, the automobile sector was actually doing rather well. Well, we can see here that retail sales with automobiles is bad, and core retail sales, when we strip out the automobiles, was bad as well. So Canadian spending really bad right now in this holiday season. Now let's talk about the United States economic numbers. We got the core PCE, which is purchasing consumption expenditures. That's the retail sector. And we came in at 0.1%, in line with expectations there at 0.1%. Personal spending in line at 0.4%, which is good to see. We were starting to see that one kind of slack off a little bit, and personal income upticking 0.2% to 0.5%, expected to be 0.3%. That is obviously a good thing. So seeing some good employment numbers, if you will, here in the United States. We're seeing some wage growth. That is good. That should lead to more spending as well. And then we got consumer sentiment out of the University of Michigan in line with expectations at 99.3. Inflation expectations 2.3 as well. So that was a slightly lower than what we saw last month. So that's all good things across the boards on our economic data here, and not so much across the pond or anywhere else for that matter. All right, bonds are in negative territory by 8 ticks here. We did bounce off of the 200-day moving average. It looks to me like we're finding a bit of a bottom here. So I talked about this in the webinar yesterday, trying to build out a bullish risk reversal, which is great for a smaller account because it's not going to eat up as much margin as even the synthetic long, but we still get that move higher when the underlying moves higher. The beauty in it is we don't have to do 100 contracts, whereas options are usually generally built around 100 of the underlying. That's still true. But with this, we can build it out so we're doing a 50 lot instead of a 100 lot, all right? So I talked about that in the webinar. I'll briefly go over that when we talk about my trade around TLT a little bit later here. All right. I don't know why I have Nike up, but we have crude oil there. I'm going to have to probably go through this and go lockstep with the charts. All right, let's take a look at the Dow Jones. It's up 100 points, but well off the highs of the open. Right off the open, we were on the highs, but have since seen the market slide a little bit. Big gap, as you can see here with the Dow Jones. One thing to note, Boeing came out and said that they were not being able to dock with the space station. That's causing some weakness with Boeing as well. That could be a big dragger on the Dow Jones as well. So keep that in mind, that it could be one of the drivers of the Dow's weakness. Here we go with the NASDAQ. It is up 24 ticks on the day, a all-time high, as you can see there. We got the E-mini S&Ps pushing higher as well on the highs of the day. Maybe a tick off of it right now, but you can see a new all-time high. Very bullish in the overall market, especially with our economic data coming out. That being said, we're seeing the VIX come off, as we generally see with robust equities. That should cause a down pull in the E-mini S&Ps. And we talked about the bonds coming off just a little bit there. Crude oil is off by $1.04 there. We did get extended over and above with the move outside of the value area. I talked about this. We probably should start seeing a little bit more weakness in this, but we are still above the 9-day moving average, and that coincides with that value area. So that should act as support there. I would like to see it come back off a little bit and back into the value area as we are in this holiday season. We don't want to see a bunch of people spending money on their gas tanks rather than at the stores. All right, and we've got the gold futures coming off, just albeit slightly. Let's talk about that Boeing trade. You'll be able to see that Boeing is off by about $4. That's probably causing only about $20 in the Dow Jones at this point. And then let's talk about my TLT trade. TLT is off by about 26 cents here, but I decided to go in here and play this to a bullish move because I don't think that the Fed is going to do anything. That should make TLT migrate back to about that 140 area. That being said, that is right around that bond area of the point of control where I believe that the bonds are going to migrate to. Point of control is actually a little bit lower, but my line in the sand for the bonds is a little bit higher where I believe that they're going to migrate back to, and that's that 160 handle there. As you can see, we're starting to build out a volume node there. We do have a volume node slightly lower here, but I think that the market's going to hold this and move a little bit higher. But if we break down too much, I am going to cover this trade. I'm not going to stay in it too long. This is going to be a really quick trade and trigger. So if I don't get this done in about 5 days, if it doesn't start looking like it's setting up, and especially if we break below the 134 area here, I'm going to look to cover this. Anyway, that being said, I went into the March and I bought the 142 calls in there and then sold the 132 calls. And I did that for a credit of 13 cents. So my break even is at 142.13. I'm not going to be in this trade to get to 142. I think that might be a little bit high, but I tried to build this out to where I had 50 deltas. That makes it worth about half of going out there and just buying TLT, because I would be doing 100 contracts, right? So with that said, doing 50 contracts, I will still get, for every dollar move higher in TLT, 50 cents out of every dollar. So that makes that equivalent there. So I was able to do that, get my break even. Actually, my break even is the 132 puts plus so I'm above where my break even is. That 132 area is where I'm looking at. Anyway, so above my break even, my 132s is down here. That's where the break even is, and that is where I would be for at expiration. So I have a lot of wiggle room. I'm not going to wait for it to go down to that area. I'm going to play this to the upside, and hopefully in 5 days or so we'll start seeing this market migrate up. All right, that's about it. Sorry about the miscommunication on the break even there. I've got a little ahead of myself. We talked about that in the webinar. If you do it for a debit, it is based on your calls, and if you do it for a credit, it is based on your puts. So that's about it. That's all I got for you guys today. Get that Christmas shopping done early. Don't be the last minute shopper, because there's not going to be anything left on the shelf, hopefully, as the shopping spree goes on. I'm thinking maybe this weekend we're going to see the retail sector get out there and start buying their Christmas gifts on this last weekend ahead of Christmas. All right, that's it. That's all I got for you guys. Other than if you can't take that, take it easy.